This is the edge timeline curve. It displays your probability of success based entirely on your holding time in a trade or investment. I'm going to go over each one of these buckets, show you where I found success in my near 2-decade career as a professional trader, and show you where most traders are in the wrong zone. Let's do this. Hi, I'm Christoph Marzek. I've been a trader for almost 20 years. I've hired traders, mentored traders. I run a trading firm now. I work with traders. Hopefully one day maybe we'll work together. I'm an investor, an entrepreneur, and I have a lot of knowledge to share with you. Let's do this. Trading, investing, hold time. Where is edge? Okay. Here's the edge timeline I talked about. Before we dive in, I want you to think of this analogy. Okay. Trading and investing is like weather. How far out can you predict the weather is similar to how far out you can predict the markets. Okay. Think about that in the back of your mind while we go through this. All right, let's start off in the left side of the curve with nanos, micros, and millies. Okay, nanoseconds, microseconds, milliseconds. Millies have some overlap with the next few sections or next section. But what world is this? This is the high frequency trading world. Okay, this is the low latency world. This is the market makers, the latency arbitrage. Okay, this is purely structural, technological edge. We don't even talk about human emotion here. Okay, we're talking about fiber optic cables, raw physics. All right, let me give you a quick example. Okay, if you can have a server sitting at an exchange in Chicago and you see an order coming through on that exchange in gold, let's say. Meanwhile, you can get in front of the action of that order on Hyperliquid or some other exchange that trades a similar gold product. You can capture that price discrepancy, okay? It's as if literally down in the nanos and micros and millies, you're able to quickly buy the same market somewhere else before it moves, okay? This is pure edge. As pure edge as you can really say. It's basically free money. Now, what's the downside to pure edge? Well, huge infrastructural costs and investment. We're talking millions of dollars. High competition. Think about it. If there's free money sitting on the street, you don't think everybody's trying to run after it? Okay? Generally, retail market just can't get there. This is not their universe at all. Even, frankly, even professional shops, they struggle here. This isn't a plug and play, grab the free dollar and let it run type of industry, type of part of the industry. But it's less talked about. There's more information now in the past couple of years. Just to put some context here, the charting use is zero. I mean, they're not using charts. Okay, they're strictly looking at the structural makeup of the exchanges, the markets. It gets pretty scientific here. All right, so looking at the weather analogy, can you predict the weather, what the weather will be in the next 5 milliseconds? Okay, yes, the answer is yes. So that's the test of, is this edge or not? Of course. Okay, let's move on to the next one. Millies, seconds, minutes. Okay, and I apologize for all the words on your screen here. We're in this area, by the way. I'm a little bit more passionate about this area because for 18 plus years, this has been my area. Okay, this is where I think edge still lives for a human, for a trader. I think that you can enter this part of the curve and actually win. Okay, why can you still win? Well, first of all, you're not really guessing necessarily where the price will be tomorrow, which is already far away. You're reacting right now to supply and demand metrics of the marketplace. And I'm going to have a whole nother video about what that even means. But basically, prices move based on buyers or sellers. And there's inefficiencies that last longer than the nanos and micros, but shorter than the hours for sure, that can cause prices to move. And if you can have a way to, first of all, conceptualize that, be able to see it, and do all the psychological stuff that a trader should do and that I do and that I'm going to talk to you about often, then you can win, okay? And the proof is in the pudding. I have an 18+ year career. I relooked at my stats. Nearly 92% of my quarters have been green, 8% red. This is my career as a professional trader. Okay, I have a few years before this where I was a retail, and that's why I'm with you guys. I know what it's like to start, okay? And I also know what it's like to be professional now. So here we go. It's defined edge. I mean, there's a lot of stuff in here. You can capture the inefficiencies. I think that it's the best way to trade, frankly, in my opinion. It's not free money. That's one thing to be aware of. It's not free money. And therefore, by the way, it's less competition. Okay, it gives you the upper hand. I like to think of this trading style as we're the Taco Hut amidst a bunch of pizza shops, okay? The Nanos world, pizza. They're making pizza. Pizza's a sure thing, right? You're going to make, everyone eats, I love pizza. Gosh, it's embarrassing how much pizza I eat. But this spot is like, all right, well, we're also, a lot of people like tacos. You know, maybe they can't compete totally with pizza, but does pretty well. This is my favorite part. When I left the retail trading world, my first 3 or 4 years, I loved entering this world and getting frequent feedback very quickly. When you're in the next bucket, which we'll go over, you have to wait a long time. This world, by the end of the day, you've received tons of data points on how you've traded, okay? And that's huge. That cuts down the time to learn, very, very small. Charting use, minimal in a traditional sense. Okay, I'm not looking at MACD, okay? Which you're going to hear me rip on MACD so often, it's going to be embarrassing for anybody named MACD. Okay, by the way, that name, perfect, right? The marketing, MACD. What do you look at? I look at the MACD, right? All right. The downside is that, I mean, this is a high mental fatigue game, which is where I think a lot of the psychology becomes important. It requires 100% focus. It does require robust tech, time commitment, resources. So is it high in the edge curve? Absolutely. But it's also realistic. You got to be realistic. This is a commitment of time. And again, I'm not talking about having a good quarter, and you're going to hear me say this often, or a good month or a good year in trading. I'm talking about a career in trading. 20 years. I'm almost at 20 years here. Okay. So going back to the weather, can you predict the weather in 5 seconds, 5 minutes? Yeah, I'd say you can. Yes, once in a while, the storm rolls in, and wow, did it change fast, right? And that's where I get burned, where traders in this time frame do get burned, but it's pretty infrequent, right? It's not like crazy amount of time or a frequency. Okay, let's go to the next one, because this is where I started. This is where maybe some of you are. This is where a lot of people are. A lot of people start here. Okay, I think it's the lowest point of the curve. I really do. The hours, the days, the weeks. Once you step past a few minutes and hours or days or weeks, you enter the zone where price is dominated by randomness. Frankly, I'll just call it that. There's headline risk. There's overnight gaps. There's like silly things sometimes, like a margin call of some huge firm happens, and like they're blowing up, and then it causes you to blow up, and that's where your leverage comes into play and your capital allocation, and you're opening up the door for, when on the previous slide, the occasional hailstorm comes out of nowhere. This is more likely that the storm might come out of nowhere. And frankly, I'm recording this, ironically, mid-July of 2026, and there's Canadian fires. I'm down in Chicago, and it's a plume of smoke outside. You know what I mean? Like, who would have thought, like, I was going to go to the Cubs game. I'm like, I'm not going to go in and inhale this, right? I didn't predict this, okay? This is a perfect example. So, which, by the way, I didn't buy the Cubs tickets yet. You see, I didn't want to hold that trade, the Cubs ticket trade, for too long. Okay, so it's the most difficult. And like, some of you might be looking at like, well, shoot, that's where I am. Okay, I would reflect on this video a little bit and say, well, you're probably playing the hardest game ever. I'm just going to say it. Okay. Years and decades. Now we're exiting the trading world here, and we're entering the investing world. Okay, which I love this part of the curve too. Structure. This is where you're investing in structural business growth, the compounding, general economic expansion. You're kind of sorry. What did I do? Your guessing kind of goes away a little bit. You're still betting on long-term growth of a company or industry or country, but most importantly, and I'm going to have another video about this, what are you really investing in when you invest in the S&P 500? Okay, or a broad-based global index? In my mind, you're ultimately investing in the growth of humans, in the growth of mankind. That's really what that's a reflection of. Okay, so if you believe that we're going to keep growing as a species, then you should be invested long-term for years, decades, right? In that growth of this planetary species, okay? Looking backwards from what that's looking forwards. Looking backwards, historically, the probability of the S&P 500 being up on any given day is about 53%. But over a 10-year period, it's 95%. 20 years, it's 100. You could buy the high, and in 20 years, historically, you still made money, okay? 20 years is a long time, but all right, so back to the weather. Can you predict the weather in 21 years? Well, it becomes a different question. No, you can't predict this day, right? I didn't know there was going to be a plume of smoke outside Chicago on July 17, 2026. But could I predict that those summers will probably still be hotter than the winters? Yeah. Okay, will the winters still be probably cold? Yes. So that's where that's the world all of a sudden you live in when you become a year or decade long investor. Centuries. Now, this is a fun one to talk about, and I would love to hear comments on this. How about this question? What investment today can outlive 200-300 years? Okay, it starts to get hazy. This is why in the curve, let's go back to the curve. I flattened this out a little bit because, well, you can look back historically and say, you know, dynasties have fallen, currencies go to zero, empires collapse. Okay, I was just in Poland visiting my motherland, and salt was such a big component of wealth creation in many countries. And now we're just sprinkling that stuff on the sidewalk whenever it snows, right? Our little droplets of snow, and we're just, you know, it's worth nothing. Yet, for hundreds of years, it was an extremely viable wealth creator. Okay, so just like weather, I'll also say this: weather over long stretches of time changes. This is similar. So again, keeping with that weather analogy, centuries of stuff. But I'd be curious to hear your comments on what industries today. I mean, I could see oil all of a sudden being like nothing, right? In I don't know, 50 years, even maybe 100. So okay, final thoughts. Left side of the curve. So this area, it's not really attainable in my opinion. This is, I think, the zone here, and I can kind of maybe Venn diagram the millies in here because millies is becoming more and more accessible to common traders. Okay, I mean, I guess I could maybe bump up hours a little bit. Okay, but days, weeks, even months. I don't think months it shouldn't be higher than hours. But you kind of get the idea. This is I think is for a trader, great. This an investor, awesome. This lull period where, oh my goodness, I don't know why it's drawing like that, where a lot of people start. I started there. You get very infrequent. I hate how infrequent the feedback was. Do I have it in here? You're waiting a very long time to find out whether you're right or wrong when you're in this dead zone down here. Okay, you could be waiting for weeks, months to find out, oh man, that one didn't work out. And then you have to look back and be like, well, what did I learn? Let me try it again and wait another few weeks. Like, how long are you planning on living for to try to be a trader? You know what I mean? Like, that's just not frequent enough. You need to get some feedback from the market. And yes, you could do back tests now and everything like that, but you know, back testing is tough. The farther back you go, the data is less reliable. Then you go more recent, then there's not enough data. Okay. And a word of caution, I would use this. Let me go to the prettier one I didn't draw on. I would use this, if you guys want to take a screenshot of that really quick, as a model of like, where are you getting your advice from? Okay, I'm here to tell you, I'm still in this world and still performing. I do slip into hours sometimes. I'm still in this world and still performing. 18 plus years, professional trader. I've taught others who are still performing. Okay, if you're hearing some gurus talking in this area, okay, it's probably worth listening to. If you're listening to gurus start talking this area, yeah, I think that's fine. If you're hearing some gurus talk about in this area, I would be sketch about that. You know, I think this stock is going to do well in the next year or whatever. I don't even know. Sometimes they don't even say time frames. They just say, I think it's going to do well. Like that, I would be weary about that, okay? So where is your edge? Your edge as a retail trader and investor is patience, okay? You don't have to have the pressure of performing. If you watch my other video about removing that pressure, where you can wait for the good trades in this world, and you can wait for the investments here to just do its thing, okay? Here's the danger zone, so be patient. All right, that's it for this video. I hope you guys got a lot of value from it. I hope I'm communicating to you how much I really want to release this knowledge out to you. I've been doing this for a long time, and I hope you subscribe. Join the channel. There's going to be tons of content. I'm going to be talking about trading, investing, real estate, real stories. I got plenty of good trading stories and investing stories. We'll talk about philosophy a little bit, success, and some humor. I'm planning on making some jokes here and there. So join the channel, subscribe, and I hope to see you guys soon. Thanks.